Good morning, SMF MMTs. What we're going to talk about is the Nasdaq comp and some of the leaders in the Nasdaq 100 gap list. We have a buyout on DNEX for $118 a share. But the one we're going to focus on is this 5.41 ratio gap on Google with an upgrade to 750. The 3.77 with an upgrade in the 400s. It's in your upgrades and downgrades. This TCCO 3.65 ratio gap. Price line's only coming in with a 2.53 ratio gap. And as this one here, your ESLT, $2.05. So the bull is gapping up 1.58 ratio. And that's where Bill will be looking at it in the brain. But be careful because it's an options expiration week. And not only that, if they pull back and the pullback in the price action diminishing price action pullback is what we're looking for. It will hold a high elevated bid and ask ratio in your platform. And not only that, your SMF IR will be throttling. And it'll have a very high throttle at that good price action. So we're looking for diminishing price action pullback, 3 teenies down, 5 teenies off the gap. We're going to see what the market makers do at 5.37. We're going to see that last week, every gap was a sell gap, sell short gap. Every one of these ratios last week was where the big money was made. Because what the market makers did was when they didn't have the buyers on the gaps, they simply just dropped the bids because, hey, there wasn't no market above it. So that's why these ratios actually went down. And at the time that they were doing that in that 5-day period, that's last week, they were accumulating stocks for the options expiration. Let us not be fooled, because that's what they were doing. So we have lots of options expiration possibilities. We're going to utilize them. SanDisk is up. And I'm going to look at the gap open down list and look what we have. Here's some of the weakness. MGLN, AMCS, and KTR. Just a couple, but it's very diminished on the gap downside. So let's be advised that the opening gap, you know, RIM had a downgrade today and whatnot, but the opening gaps down are very diminished. So the broader market for the options expiration is starting with a huge gap open at the price, and that's the way that it's going. And another thing is that we're going to be very key specific to that price action pullback and how that brain throttles. And we're going to be watching how many price action highs in your platform are being hit, because that means that people want to get in. Nasdaq, pre-market, opening gaps. The trade management is as follows, is on that top gap where that price action gets exhausted and the volume starts to dry up. When they slide half of the previous SMF price action bar, it needs to be longer in price. So it needs to be expanding. So that way you're going to know that that same trade that happened last week, 5 days in a row, turns out to be the same way. We don't know yet. The only way that we're going to know MMTs is the diminishing pullback. The diminishing price action pullback. So the pullbacks are shallow in price action. That's going to be a way that things are going to show in the brain. Okay? And that's how we're going to know to buy and sell up that next high, is buy that pullback and sell up to the next price action high and take your exits, you know, 14's up. We're going to take a look in our platform exactly how these are going to respond, every one of them. Okay? I don't know what this Decker deal is right here, 0.47, even why that's in there. I don't pay attention to it. The gap price on Apple's upgrade is increasing. And this is over-the-counter NASDAQ stocks, MMT. Watch the Amazons today as well, Rachel, and watch Win. It's a retailer, but this one here could make a move, and the Netflix does not seem to be getting a gap. And Netflix, when all the other stocks are gapping up, this one's always been a short, and it's been like that for a number of weeks. So you can see when other stocks are gapping up, this one's going down in its peer group. And Google is thromboning on the gap, and so is Apple right here, 324.59. Price action is going to be made. The short sellers that were selling short last week and accumulating shorts, the bull has got them trapped below the market prices. So, they're looking way up at that bull, because that bull right there is that bull gap right there, and those bears are trapped below the price. So that's part of what mechanics are in price action with markets against bear and bull. This $6 gap is increasing, and it's options expiration, MMTs. Watch the gap price. Watch the gap price in some of the call options on Google. Give you an example. Here's a 580 call that expires in January. Okay, they really haven't done much with this call, MMTs, and should be well north of $40 per contract. So I'm going to start developing here. And another gap contract is this expiration is a 610 call. Got to 95 pennies. I was trying to buy on Friday. We're not in this particular one. However, it was $1.90 on the high on Friday, and they took $1 premium out, and now you got a super gap. Now you got a super gap over 6 ratio gap. And we're going to see, based on this price ratio gap, we are going to monitor how many pennies on the dollar premium that the market makers in the option pit, do they inflate that 610 call? Do they steal that premium and then want to start buying? Don't be a bit surprised to see it break above 610 during this options expiration week.